Yeah, it's another day that we continue with the review of business data analytics, the August 2025 sitting. So far, we have reviewed one question on this channel. We have reviewed question number 21, which was dealing with published financial statement. If you are yet to watch that, kindly visit our page and our channel so that you can be able to watch that and follow that particular review. So today we are looking at question number 24. And question number 24 was dealing with auditing, the specialization area for auditing, specifically the audit schedule. It was dealing with the audit schedule, and we shall go directly to tackle this. And if you are new to this channel and you are yet to subscribe, kindly consider subscribing. Consider subscribing to this particular channel. So the question reads, question number 24, the following balances were extracted from the books of Limau Limited, a medium-sized entity, as of 30th June 2025. They have been given that particular information there. That is the information. Additional inventories as of 30th June 2025 were valued at 56 million. Depreciation and amortization are to be provided on cost of the asset as follows. Asset, the rate, building 2% per annum, fixtures 10% per annum, software 20% per annum. Land is to be revalued upward by 5 million as at 30th June 2025. The expected credit loss as at 30th June 2025 was estimated at 2.4. So the expected is 2.4. Then operating expenses prepaid at the year end amounted to 400,000, while unpaid administrative expenses were 700,000. The company estimates tax for the year at 9.5. So you are required the audit schedules showing trial balance before adjustment, trial balance after adjustment, profit or loss items, and the statement of financial position. So in this question, we require two trial balance. So the trial balance before and the trial balance after adjustment. So before and after adjustment. So we shall have the trial balance before, we have adjustment so that we can be able to get the trial balance after, and we have the profit or loss items and the statement of financial position. So those are the items that we require. So in this case, I will have the trial balance before. The trial balance before, trial balance. The trial balance before. So this is before adjustment. Trial balance before adjustment. Adjustments. Then we shall have the adjustments. Adjustments. Then we shall have trial balance after. Trial balance. Trial balance after adjustment. Trial balance after adjustments. Adjustments. Then P&L, profit and loss items. Profit and loss. Profit and loss items. And the statement of financial position items. Statement of financial position. Statement of financial position. Position items. Statement of financial position items. Yeah, that way. And they are shillings in thousand. The shillings in thousand. Okay. So I'll just put that shillings in thousand. Shillings in thousand. And I'll just drag these across. So before this, let me just cut that and paste it here. And I'll drag from this point now. Here we shall have the debit and credit, DR and CR. That way, DR and CR. And I'll copy that and paste it. Yeah, DR and CR. I think that one will be okay up to that particular point. Just have the top and bottom. Yeah, that way. So the trial balance before, so you have the adjustment, trial balance after, profit and loss items, and the statement of financial position. You can decide to have the column, the borders that separates them, but up to that point, it's okay. So these others we shall have is our details. So the first thing, I will copy this. Just copy this. Yeah, just copy the entire thing and paste it from this point. Yeah, copy the entire thing, and we need shillings in thousand. Just include the 1000 separator that way. So that way. So the easier way, when you have copied all of them, just put them on the debit, so it will be easier. It will avoid you going back and forth. So from that, now we can be able to assign them either as a debit or as a credit, either as a debit or a credit. So land, it's an asset. This is an asset, it's normally debited. Building is an asset. Accumulated is normally credited. So our work will just be to cut and paste it on the credit. Fixtures is an asset, is debited. Accumulated is normally credited because it reduces the value of the asset. Inventories at the beginning is debited. Other operating, admin, selling, the credit loss. Yeah, so remember, credit loss is a bad debt. It's normally debited. Dividend paid, these are expenses, they're normally debited. Then the tax paid, that was already what was paid during the period. Then the retained profit, yeah, retained is normally an equity, and equity are normally credited. Software licenses is an intangible. Bank overdraft is a liability. Ordinary share premium, loan payable, all these up to the payable part, they are normally credited. Either they are liability or equity. The ordinary is equity, 8% is equity, premium is equity, 6% loan from EC, this is a liability, trade payable is a liability. So receivable is an asset. Expected credit loss as at 1st October, these are provision. Yeah, these are provision, and provisions are normally credited. Provision for bad debt at the beginning, it's normally credited. So sales is credited. Sales will be credited at the beginning. So purchases will be debited, discount allowed will be debited, discount received will be credited. It will be credited. Yeah, that way. And that is it for that. That is the first part. Just create some room for the other adjustment. I'll just create up to that. I just need to get the total. Yeah, the total from this point. Yeah, this total. Yeah, the total up to that point, and you enter. Yeah, that way. So 723, and here I'll just drag across up to, I need up to this end. Yeah, that way. And I'll put that, and I will bold those totals that way. So you'll find that the initial trial balance before any adjustment, it has already balanced at 723. The key thing under the trial balance before adjustment is just the figures that they have given you. You just classify them as debit or credit. So you have to know which items are supposed to be debited and which items are supposed to be credited. That is the key, and you get your marks for the first trial balance. Then we go to the adjustments. Adjustments, we deal with the additional items in the additional information. And the first item is the inventory. Yeah, the closing. As we have said in this channel and during our revision, is that the closing inventory, we normally have the double entry for it. Yeah, closing inventory. We shall have closing inventory to profit and loss. To profit and loss, the one that will go to profit and loss, and closing inventory to financial position. Financial position. So those are two items. One will go to the financial position, the other one. So to the profit and loss, we normally credit because it's normally deducted. which is normally deducted, so it will be 56,000, and we debit that. Financial position, we shall debit it as an asset. It will be debited as an asset. It will be debited as an asset that way. So those are the two under that. So you have to have the double entry for the closing. Then number 2, it is the depreciation. Yeah, the depreciation for the building. I can just calculate it here. My depreciation building is 2% per annum, 2% per annum, and here building we had it here by 2%, 2% per annum, so you'll get 1600. Fixtures, remember this is on cost. Fixtures is 10%, and fixtures we had it here by 10%, which will be 64, and software, so it's an amortization, software license, we had it here, and we multiply by 20%, which will give you 32. So these are our depreciation. Yeah, so we have depreciation for building. Can just include it, dip for the year, depreciation for the year. So we have for the building, this is the depreciation for the year for the building. For the fixtures, can still pick that, dip for the year for the fixtures, and dip for the year, for the, so this one is not even dip, amortization. Amortization for the year, amortization for the year. This is for the license, license, amortization for the year for the license. So this one, remember, it is it is debited as an expense. So for the building, we had 1600, and I'll drag that because there are 3 of them. Just drag that. Yeah, for the fixture 64, and for the amortization is 32. The same now will be credited to the individual. Building accumulated, we shall credit because it will increase by that value. For the building, double entry. For the fixtures, we had accumulated for fixtures, and then we had amortization. For the software, we did not have any amortization. Yeah, so we shall have double entry for that. If we did not have any, we shall have double entry for accumulated amortization. Accumulated amortization. So amortization. Just need to see the correct spelling for that. For amortization, yeah, amortization, that way. That means here we do not have an R. Amortization, accumulated amortization, here the same value will be there, that way. That is for the depreciation and amortization. Land is to be revalued upward by 5 million, so we shall have revaluation. Land, it will increase by 5 million, so we shall debit 5 million to land, and we shall create a revaluation if we do not have any. Yeah, we shall calculate the revaluation reserve. Revaluation reserve. This is specifically for land. It is an equity amount. Revaluation reserve for land. We debit and we credit. Then the expected credit loss as of 30th June 2025 was estimated at 24. Yeah, the credit loss 24. We have it. I think I saw it. And this is the expected credit loss. The expected credit loss, this is a provision. When you talk about the credit loss, is a provision for bad debts. Expected credit loss. So here the credit loss is the bad debt itself, but we have the expected credit loss, this one. So at the end of the year, it is expected to be 24. Is expected to be 24. So here we shall debit 24. and we credit 24 at the end. We credit the receivable. Yeah, double entry. It normally reduces the value of the receivable. Yeah, it normally reduces the value of the receivable. The difference is what will go to the income statement. Huh? Yeah, the difference is what will go to the income statement. What we shall account for in the income statement will be the difference. So that is 24 as our adjustment to that. Then operating expenses prepaid at the end, year end, amounted to 400. So operating expense, it was prepaid. We just need other operating. I think it is that other operating. We did not have any. So other operating expense, it was prepaid here. Prepayment, we shall deduct 400, which will be an asset. So prepaid operating expense here. So prepaid operating expense of 400, which will be an asset. 400 here, prepaid operating expense. Then the same note, while unpaid admin expense or 700, admin expense, that is accrued. Admin expense accrual, we add here admin 700, which was unpaid. So accrued admin expense, accrued admin expense of 700, which you shall credit as a liability. You shall credit as a liability. So you'll insert some few rows there. 700, and the company estimates tax for the year at 95. Yeah, tax for the year as 95. We shall have our tax, our corporate tax for the year. Corporate tax. So corporate tax for the year, which we shall debit. 95. 95. And because it's an estimator, we shall have accrued corporate tax. Corporate tax of 95. So here is our R, corporate tax. Yeah, that way. They'll find that it is balancing at 85,200, 85,200. Later on, we shall look at what was paid. Yeah, there was some tax that was paid during the year of 65. Yeah, tax that was paid during the year of 65, of which it will reduce. This amount that was paid, it will reduce our liability. Yeah, it will reduce the liability because the total tax is 95, but already we had paid 65. So we shall deal with that. We shall deal with that when you're preparing the financial statement. So that is the adjustments. But now the adjustments were to assist you in order to prepare the trial balance after. So they required these and these, but adjustments were necessary so that the trial balance after adjustment, so just adjust. Like for land, we shall add the 5,000. Land, we add 5,000. Building will remain. So building will remain at 80. Accumulated, we shall add the 2. For the accumulated, we add the 2. For the fixtures, it will remain. Accumulated will be added, this plus this. Then for the inventory, it will remain. Other operating, we shall minus the prepaid. Admin, we shall add the accrual. The selling will remain. So this one we shall drag, yeah, up to this point. This will remain up to the tax that was paid. Retained will remain at that value. Software will remain. Overdraft and the rest. This one will remain up to this point. This will drag up to that point. When it comes to receivable, you will have to eliminate the allowance for credit loss. Expected credit loss, we shall pick this at the end. what we have. Sales will remain, purchase will remain, and the discount will remain. This other one will remain. Closing will remain, both of them, and these others now you'll drag up to this point. These others will drag the two of them. This one will debit, you will credit, you will debit, and you will credit the trial balance at the end, that way. So that one will be your adjusted trial balance. So you'll find that there's a difference. There's a difference between the two because it's supposed to balance. You just need to know what will be the difference, and I believe the difference is because of the expected credit loss. Yeah, the expected credit loss. Here we had 18. Let me just see the difference so that we know whether it is a credit loss. This is 805,400 and you minus 803. 805,400 minus 803, 600. Yeah, the difference is 1800. So 1800 we shall account for both here, of which now you'll find that we shall have the difference. It is increasing by the increase, because the increase is what will be taken to the statement. The increase is what will be taken to the statement of the financial position, the statement of financial position. But already we have accounted for it. We have deducted the what? We have deducted the receivable. Let me see here. If we account for 24 minus 18, the difference between the two, and that one will find that it will agree at that. The difference between the two when you are preparing the adjusted trial balance for the expected credit loss, or you put these 1800 on the credit and 24 on the debit. Still that one will be okay. But now here we are looking at the difference between the two. So the final, what we shall take to the statement will be the 600, which is the difference. Yeah, which is the difference. That one still will be acceptable. That way, 16, the 600, which will be the difference that we shall take directly to the statement of profit or loss. So we go to the statement now of profit or loss. The statement of profit or loss. And for the statement of profit or loss, we just need to take the items. The items that we are supposed to have there. And the first item is the opening inventory. Here, opening is normally debited. Then we have operating expense is debited. Admin, all these expenses up to the tax. Okay, so here we shall pick up to the dividend. Yeah, up to the dividend. Up to the dividend. Because for the tax paid it will not reduce. We shall take the expense, the what? We take the overall provision, not what was paid. We shall take the overall provision is what we shall account for it here. Yeah, it's what we shall account for it there. Then here the other thing that we shall account for here. So for the expected credit loss, we shall take the 600 as our expense. We shall have our sales and our purchase and our discount allowed, discount received, and the closing inventory, the depreciation for the year, and the amortization, all this plus the amortization. Then we shall take what else? The prepaid, accrued, the corporate tax for the year. Here, corporate tax for that particular period is what we shall take as 95, and I think that was all that we have there. Remember, the difference is normally the profit. The difference is normally the profit for the year. The profit for the year. So profit for the year. So profit for the year will be the difference. The difference of the balancing figure here. We shall take 549,000 and we minus 525. 100. We'll get, we shall have 23,900 as our profit for that particular year. We now go to the financial position, the items that we shall take to the statement of financial position, starting with the land. Here we go to building with its accumulated, that way. Then we go to fixtures with its accumulated there. Then we go to, so the others now there, the retained we shall put the opening. For the year we shall add it later as a separate line item. Software license, here the license, the overdraft will go hand in hand with all these up to 2,800. 2,800 is a payable, share premium, all that. Then we have what else? Okay, so the next thing, we are done with the payable. Receivable here is an asset, which is this. So this value, I'll just expand this. So we need to have the value for the receivable, this one. The receivable is this. Then the expected already we have accounted for that. The closing to the financial position, this one, the one that was debited to the financial position, this one. Then the other thing, we have accumulated amortization. Accumulated amortization of 3.2. Accumulated amortization of 3.2, that way. Then the other thing, we have the revaluation. The revaluation of 5. We had the 700, which was 700 was a corporate, not corporate, but accrued. Yeah, and apart from 700, which was accrued, we had 400, which was prepaid. The prepaid of 400. The prepaid of 400, which was an asset. 400. And we had now the what? The corporate. Corporate we shall put it. But before corporate, we had the profit of this one. And now we have the corporate. Remember, for the corporate, we paid some. So we shall not put the entire. Remember, when you put the entire, you see, when you put the entire, you'll have 278 when you put the entire. But because we paid, we shall deduct what was paid. The liability will only be part, because already we had paid. Yeah, from the trial balance that was adjusted, there was a tax that was paid, this one. We shall have to eliminate. When we are dealing with what we shall have as a liability at the end, we eliminate what was paid during the year. It will be eliminated, and when we eliminate, you'll find that it will balance at 272. So the only liability that we shall have at the end is 3,000 for the tax, because we had already paid the 6.5. We had already paid the 6.5, so that you'll have to balance it at 272, and that is how that audit schedule was supposed to be prepared. Yeah, for your 20 marks, and you find that I've taken, I think, 30 minutes. Yeah, so it's less than 36 minutes. A student could have completed that, and you could have gotten your marks. So the key that will be marked whenever this question will be reviewed, or when they will be marking, the key column, we have the statement of financial position, the statement of profit or loss, the trial balance after, and the trial balance before. So those are 1, 2, 3, 4. If they decide to include the adjustment as part of your earnings for the marks, then you'll be able to have 5 columns. You'll be able to have 5 columns because the trial balance after will be dependent on the adjustment. So if it is 5 columns, you'll find that each particular column will be taking 4 marks. Yeah, each particular column will be taking 4 marks. And for 4 marks, they will take at least half an entry for 8 correct entries in each column. 8 correct entries in each column, you'll be able to get your full marks. If each entry will be awarded a half a mark. Yeah, that is it. So kindly consider subscribing and follow for the other questions that still will be reviewed. Question 22, question 23, and question 25. So thank you.